Hello, everybody. I'm still working on potential changes to my strategy, and I still need a bit more time to see if I can work things out and what changes will be considered. So, right now, I released a video yesterday, and I've gotten a lot of comments and a lot of feedback, and I'm considering everything. All options are on the table, and I wanted to talk about that. And so that's why I decided to take the tall order of debunking the myth of letting your profits ride and cutting your losses short. Now, this is what one thing that most people initially tell me is, oh, your money management and strategies are completely wrong because you don't use the idea of letting your profits run and cutting your losses short. In theory, that's a great idea, but I wanted to try to get you thinking a bit of why this may not be the best way to trade. So let's get into it. Small stop losses equal potentially more losing trades, right? Think about it. Larger take profits, potentially fewer winning trades. Why? Because it takes the market longer to go into your profitable direction because you need more pips. More pips usually means more price movement, which could potentially mean more time in order to get that profit. Fact. This is a fact. You can check it online. You can also use your head. Profiting 1 pip is easier than profiting 2 pips. Think about that. That's how the markets work. Profiting 1 pip is going to be easier than trying to profit 2 pips. Let's say you have a 50 pip stop loss and 200 pips take profit on your trades. Now this is a very cookie cutter way example, but still, the idea of cutting your losses short and letting your profits run. Losing streaks can happen. 10 losing trades in a row equals 500 pips. Now, I know that may be extreme, but this happens. And to some traders, it happens way more than just 10 trades. I've seen some traders have like 20 trades, losing trades in a row. This is not. It doesn't mean that necessarily mean that their strategy is bad. It just means that the market is going against them at the moment, and that can happen because the market goes through phases of profiting and of trending and ranging and being flat. And so sometimes the strategy that you're using can give you multiple losing trades in a row. And especially if your strategy consists of a smaller stop loss than your take profit. You need 3 profitable trades in a row to make up for the 500 pip loss that you had from the 10 losing trades. And to also come out with a 100 pip gain in the end. Fact, the tighter smaller your stop losses are, the more likely they are to get hit. And that's just how it works. The smaller amount of price you're looking for or your target, either for your stop loss or for your take profit, the more likely it is to get hit. You got to realize that's how the market works. That's how price moves in the market. The more pips you're looking for, the harder it's going to be. The smaller, the easier it's going to be. The smaller your stop losses are, the faster and more likely they are to get hit. Larger stop losses to intake profits. So this is the mentality that I use in my trading. So why do I think it's better? Well, initially, it's actually no different because larger stop losses equals fewer stops getting hit. Smaller take profits equal more profits getting hit. But we still have the same issue here, where let's say we have a take profit of 5 pips. And it's easier to get 5 pips, right? But when we get hit with that 200 pip stop loss, that wipes out all of the profits from our 5 pips from the multiple 20 or 30 streak hit that we did with profitable trades. And so the same problem persists here, where one stop loss can take out multiple winning trades, and up here, a losing streak of smaller stop losses can knock us out just the same. So what's the benefit, and why do I see having a larger stop loss better than having a tighter stop loss? because it gives us more tools at our exposure. We have more disposal. Sorry, we have more tools to work with when our stop losses are larger. Meaning we can work with money management. We can, if we're not right on the first trade, we can potentially be right on the second, third, fourth, or fifth. And it gives us a lot more opportunity to make potentially a bad trade better by having a larger stop loss. With a smaller stop loss, we can potentially prevent a larger stop loss if the trade happened to move against us in a big way. And so we were able to cut it early. But we still have the potential of getting hit with multiple losing trades in a row if the market happens to go against us. But so the reason why I think that this is better is because it allows us more freedom, more control to try to make something a bit better. Because as traders, we can't always be right on the first time, on the first try. And it's necessary to give ourselves more tries, more attempts at getting that trade right. And that's what I see as a potential edge in the market. Have I executed it very well? Not yet, unfortunately. I have some really great tools, a good strategy at my disposal, but using it in the correct way is never an easy thing. And trying to balance everything that you've learned in the past 14 years, 13 years, into a strategy is pretty tricky, especially when so much in the market is going against you. The markets are kind of built for you to lose because they feel somewhat random. And that's also going to strike probably some criticism, is that a lot of people don't find the markets to be random. I feel like there is that a good majority of the market is random. And it's just because of how the nature of the news and how the news works. And so it's hard to really have an edge in the market when it comes to trying to predict what's going to happen. Predictions are useless because we don't really know what's going to happen until it happens. Technical trading by itself is not really a viable way to trade because technical trading can be instantly taken off the table when news comes into play. So somebody saying, oh, I think that this level is going to hold, technically speaking, when it comes to technical trading, yeah, it very well could. But then if news is involved, then that technical level could not have any effect or little. So that's why the markets feel very random. And it's important to try to build a system that can utilize both or try to uninvolve the other. So if you have a technical trading system, try to not trade during the news, remove your trades before, try to build a system that filters out the potential volatility that happens with the news. If it's a news system, and it goes directly off of news, technical trading could have an effect on that kind of strategy as well. So it's about trying to balance all the best ideas because you can't get rid of the potential risks in any system. Every system has risks involved. Mine had risks of when price goes against it in a big way, and you need to try to figure out how to minimize that risk. But unfortunately, it's something that doesn't happen very often, and so it was hard and difficult to try to work with it. So that's what I'm trying to do now. So here we have my strategy, okay? And this is a test that just finished in the background. This is the strategy as it sits now. And you can see that there were losses here. There was one here. And then there's currently one right here. There might have been one earlier on that I can't really see. So this is the big one that we're talking about right now. And you can see the previous win that just happened before that. And this is the back test, so everything's not incredibly accurate when it comes to how the profits are taken, but the entries are. The entries are pretty close to what they are and were to us in the strategy. Okay, so we have this is where the losing trade is, right? And it closed out where it did because that was the end of the test. And so it closed out right where the price where price was at the moment. Okay, so let's scroll back to show you how many times the market has gone close to the 500 pip mark. Now you know that each of my trades have a 500 pip stop loss on them. So this one moved during the tariffs drama about 370 or so pips. Okay, before it reversed back. Now if we scroll back, you'll see that there are times that we have some higher drawdown, but it's nothing like 500 pips. This one was 200 before it reversed back down. Okay, so here's a big one. This one moved about 440 or 50 pips before it moved back down. This one moved about 190. But you can see that in most cases we have trades that roll into profit pretty early on. This one was 180. This one looks like it was about 200 as well. About 200. Okay, so this one is one of the worst, one of the bad ones. And this one moved about 550 or so pips before it reversed back up, and it's because there was a gap, and it was believe it was during some Brexit drama that happened that caused such a massive gap in the market. That was about a 200 pip gap, but it did recover after that, but it did push our losses down to about 550 pips, and you can see that some trades were closed out at that moment. I believe that this one was right about in here. It might have been over in here, but I'm not exactly sure. So scrolling back a bit further, let's see if I can find another group of bad trades. 236 pips. This one was 390 before it reversed. So you can see that we do have some higher drawdown times where we do, and with multiple trades, but most cases they reverse within a 500 pip gap, or 500 pips from the first initial order. And I'm trying to find the worst one here because I'm not sure if that was it, because I believe that there was one that was about 600 pips or so from the initial order. There, here it is. This is it. So this one is the worst one. I believe it's this one right here. And you can see that this one is very similar, but just on the buying side. So this one moved 623 pips before it reversed back up. All right, and you can see that there were trades that were closed out and before the reversal happened. So this is the worst case, and this is why I based off my stop loss off of 500 pips apiece. Is because I'm basing it off of what happened in November of, date is this? November of 2014. Okay, so that's something that happened 4 years ago. And so I'm basing my strategy off the worst condition and in more. So I'm giving it even more room than the 600 pips that happened. This happened one time in 10 years. So, and I did take the loss. I did take the loss on a few trades. So it's similar to what we did now. So currently, what's happening in the market, where we have this pullback happening now, you can see where my trades were closed out. Let's go to the 1 hour. And where the trades were closed out here, I closed it out right at the peak. I knew that the 184 area was a pretty substantial level. I wanted to try to hold there, and basically closed out my trades 10 pips before it started reversing. And it was difficult for me to make this decision because I knew that what was coming up was the potential for a big Brexit vote or decision to be made, and that would cause the pound to climb up in a big way. But what happened recently with there's UK inflation report that came out, and inflation was weak, causing a kind of an overwhelming. It started to overwhelm the Brexit uh, vote potential that was happening. So I expect this to fall more, is what I'm saying. I expect this to fall down to about at least the 182 level and maybe 181 before the actual vote happens on Thursday. I don't know. We don't even know if there's going to be a decision for the Brexit vote. There's been rumors of that. We don't know. But why do I feel like it's going to fall? Because how the market typically works. One, my strategy says that it will fall, right? Within a 600, typically a 600 pip move from the starting trade of the basket. And two, I expect a pullback to happen before the Brexit vote. This a lot of times will happen before big news, where there's rumors of that big news coming out, run up. Then once a couple of days or hours before the news actually releases, everybody pulls out of their trades because they don't really know what's going to happen. So they start taking profits, and uh, and so they start closing out their long profitable positions, and it causes this to push back down, and that will likely continue to happen before the news on Thursday. When the news that I'm looking at, just to show you guys. So tomorrow we have the U.S. dollar FOMC, which is going to be a big deal. And then the day after, on Thursday, is the monetary policy summary and official bank rate. And in this discussion is the potential for a Brexit vote and a decision to be released during this time. So it's possible that we could hear something from that, whether it's a decision on or an agreement has been met or they need more time. But that is a big day. So my idea is and you can see I have a sell trade in right now, to ride this down a bit until at least 182, maybe 81, 181, and reevaluate when when the news gets closer on Thursday, and what rumors are, what we can expect. But I do think that there is more potential for this to run down than there is for it to run up at this point. There's going to be a lot of people that disagree with me, and that's fine. Or they're going to say, well, you're trading against a trend here. The Brexit votes are going to overwhelm. But what if a decision's not made? Then if no decision on Brexit happens, this is going to go so far down. It will probably go back down to the 181, 118 level, and maybe even further if there's no vote. And if there is one, of course it's going to rise up. But there's so much that needs to be done on the Brexit vote. It's hard to think that they're actually going to come up with an agreement. And it's frustrating because these Twitter accounts that get posted on Forex Factory saying, oh, there's rumors of the Brexit vote taking place or an agreement being met, and they're just rumors. And people ride and use these Twitter accounts for news to manipulate the price and to do it in a temporary way. And for those of you that know anything about trading, you'll realize that a lot of times what happens before something big news is the price will ride up and it will be manipulated to ride up just for it to come back down, fall back down, and push back down in a big way. And so traders will manipulate the price to run it up, to get in it at a very good place in the market, like right up here at the peak at 184, and then ride it all the way down back to 1.80. And that's a possibility to do. They manipulate the price in order to make obscene amounts of profit. That's what a lot of these big banks and hedge funds will do in order to get in at better prices, and they'll all kind of work together in this way to manipulate the price. It's this happens in every market. It's not just in the currency market. There's manipulation in every single market out there. All right, so guys, this is where I see the market's going, and this is how I see cutting your losses short and letting your profits run. So anybody that writes in on that you need to trade in this way, I'm going to disagree with you because of what I've already said. I mean, you may disagree with me, and that's fine. And I think I've at least pointed out that there's not a big difference between letting your profits run and cutting your losses short, or vice versa. They're very much the same because the biggest idea, the thing that you should be pulling from this is it's easier to profit 1 pip than it is to profit 2 pips. And if it's a stop loss, if you have a stop loss of 1 pip, it's going to get hit first before 2 pips, right? That's just how it works. So think about it. I made this video just so you can think about the things that I am now for my system and how to improve it. And the idea of letting profits ride and cutting losses short may not be the best option for my system or for trading in general. It is being considered. And a lot of people think, oh, why aren't you using this, or why aren't you using that? Of course I've considered it. I've looked at it. I've dissected it. People think that I'm naive or stupid not to look at different trading methods and uh, like technical levels or support resistance indicators, Fibonacci levels. You know, all these indicators that potentially help us. Yes, I've considered all these indicators. There may be some combinations that I have not considered yet, and I'm not saying that I know everything. Obviously, there are things that I'm probably missing. But the generalization of what people typically give me as advice on to do this or to do that, it doesn't give me enough. Like cutting your losses short and letting your profits run is such a generalization of a profitable trading method that it doesn't do anybody good. That's the problem with a lot of these mentors out there, is that they give you tools to use for trading. You if you trade in this specific way, you'll come out a winner because you are letting your profits run and cutting your losses short. It's not that easy because, like I said before, you could have 10, 20, 30 losing trades in a row. Or you could have 10 losing trades in a row, one profitable trade, another 10 losing in a row, and another profitable, and you're still a losing trader because you're still not profiting enough to counteract the losing trades that you're having. Or vice versa, you're getting hit with too many 200 pip stop losses, and you're not having enough 5 pip gains in order to come out in a profitable way. That's exactly what I'm suffering at the moment. Is my stop loss still needs some work, and that's what I'm trying to dissect now, to see what stop loss can give me the most benefit, and also the take profit level. Because I did use a 5 pip example, but it doesn't mean I can't use a 20 pip take profit or a 30 or something like that in order to work better with a higher stop loss. So it's all about trying to find that balance. All right, so I thought I'd give you guys this video, let you know where I am at this point. All things are still being considered. If you guys want to give me further advice, I'm still looking over that on the comments. And some of you did allow me to think, and actually, it was Sandis. Thank you for writing in on the Telegram group, because you kind of reinforced the idea of the things that I was already thinking about. And this is, to me, considered constructive criticism. When somebody is criticizing a system that somebody's using, you can't just say, you need to use a completely different system, because you can see right here that my system has had a lot of potential over the many years. So why am I going to scrap the idea for something completely different just because it lost 36%? Okay? It has to be constructive criticism that works within the system. But the problem is that a lot of people don't know how the system works. But if you have an idea, then that's something that you can do. And with Sandus here, he's been critical, but it has been constructive. which brings up potential good points that can work with the strategy in the future. And if you have anything like that, I'm happy to hear it. I try not to shut people down because, uh, but it's sometimes hard for me to listen to generalization of trading techniques, especially when it comes from uh, losing traders. That idea sucks in the back of my mind because I know that a lot of this advice is coming from or likely coming from a losing trader. I'm a losing trader, and but I understand that a good majority of people lose, and so that's why I have to be very careful with the kind of techniques that I use because just because somebody says that it's profitable does not necessarily mean that it's profitable. That person could be lying, or that person could be using that kind of tool with discretion, and that's why it's profitable for them. But because they're using with a specific discretion that they may not have disclosed, uh, means that somebody else using the same strategy could be losing with it. So that's that's the thing, is that you gotta try to take all of what you're receiving and take what you think that works the best. So anyways, I've been going too long, so I'm gonna end it there and hopefully come out with another video tomorrow with some new ideas. Well, not necessarily new ideas, but uh, some things that could potentially improve the weak points in my strategy. So until tomorrow, I'll see you guys then.